The new group CEO of Zenith Bank, one of Nigeria's tier one lender, closed the market yesterday and provided a very brief update on the new direction of this very large commercial bank to the market. After the briefing and the market, closing the market for midweek, he sat down with Temple Ashaju, our business correspondent, and they had a few words with the group CEO of Zenith Bank, Ebenezer Onyeago, about the new direction for Zenith Bank and his thoughts on some of the recent monetary policy tools issued by the central bank to deposit money banks. Take a listen.
One thing is certain, the vision of Zenith Bank has already been laid by our founder and chairman, Mr. Jimovia, and that vision remains very compelling even with changes in the market conditions. And that vision is to build a dynamic and globally acclaimed financial institution that applies technology to run business in rendering very outstanding premium service, premium customer service, and outstanding return, superior returns to shareholders and all stakeholders. That vision isn't changed. The vision still remains very compelling till now. What the responsibility we have is that not only did he lay the vision, he also built a solid foundation with structures. And the structure of Zenith is such that it's so disciplined, it's so focused, it's so market embracing that it compels you to behave in a very professional manner. So we've seen two leaders emerge after Jimovia, and they have all upheld the legacy. Our biggest responsibility is to uphold the legacy of Jimovia, making sure that, yes, the pecking order of Zenith as far as rating is concerned, in not just in Nigeria, in Africa, and getting into the global space, we enhance it. We have to ensure that we don't destroy value. We must preserve value. We have to grow and expand the market share. We have to be dominant in every segment of the market where we are. We are strong. We have a premium position in terms of market leadership at the corporate, which counts for so much. The retail space, which is emerging, we are taking a very good and effective position and using our strong digital and electronic capability to drive business. So ours is preserve the legacy, achieve, maintain the superior performance, achieve optimal growth, and I am very confident we are able to achieve that because, again, we also have very outstanding team. Our team, they are rated the best in class anywhere. Not only are they best in class, everybody you see, whoever gets into Zenith doesn't want to leave. So you see a situation where Zenith maintains the least staff turnover rate in the industry. That helps us to retain institutional memory. Once you are able to retain institutional memory, you preserve culture, you preserve virtues, you preserve the pedigree of the institution. So that's what we need to do, preserve the pedigree, make sure that we continue to remain a growth institution, dominate the market, be innovative in our product development and new processes. So, and we are equally very strong when it comes to digital capability. We have strong in-house software and hardware architect that can customize a few things for us when we want to customize it. So I would say that market conditions may change. We may not be able to predict what happens in the marketplace, but we can predict that Zenith will continue under the new leadership. Zenith will continue to be dominant in the market and deliver very strong and superior results for all stakeholders.
So you now have a new regulation. You're expected to lend more to the real economy, and you now have a ceiling to your remunerable placements at the SDF window of the CBN. How are you coping with that?
Banking is a regulated business. We all know that regulation change from time to time, and part of the things we have in Zenith is that no matter which way the regulation goes, alignment and adaptability is so easy for. That's because of the robustness of the system and process we put in place. Yes, CBN said minimum loan to deposit ratio has to be 60% for every bank come end of this quarter, but as I speak to you, our minimum loan to deposit ratio is well above that, is about 61%. So we are not under any pressure to comply.
But how have we been able to achieve that? Because Moody's rating, for example, has said that it is going to be very difficult for banks to achieve aggressive lending.
Well, the truth is that aggressive loan growth may not be there, but what we must also bear in mind is that our economy is not on a lockdown. the activity is still going on. Therefore, intermediation is going on. For as long as we are not on a lockdown, there will be opportunities. We are seeing opportunities in agric. The agric space is opening up, thanks to the novel ideas and outstanding initiative of the CBN. There is massive improvement in that sector. CBN has also come up with a good number of incentive schemes to encourage this sector to access loan at single digits for them to ramp up and increase their production capacity and all that. So all that, we see are opportunities coming up. Then the retail space is also opening up. The retail space is opening up, and the whole idea of the CBN directive is to see how we encourage the retail space. And if you take a look at the Nigerian economy, there is no much leverage. A young man who gets employment, he gets a home, he needs to equip it. And he probably needs maybe $1 million to buy electronic equipment. He needs to save to get that done. It will probably take him like almost a year. But if we have a strong leverage and credit system, he can access the credit easily, and that will increase consumption. So we welcome the development and initiative by CBN to encourage lending to the retail segment so that we create more leverage. And as we create the leverage, what happens? In a way, it helps to bring up aggregate demand and consumption. And that will have its own effect in improving GDP. So it's a welcome development. The retail space is big and massive. And what is also going to encourage retail lending is the emergence of the bank verification number. Within the Bankers Committee, we are building strong capabilities into the BVN such that if you take a loan from a bank, first, the BVN we are dealing with identity issue is solved. You can be identified anywhere in the bank once you have a bank account. Two, the capabilities we are building into it is such that we can use it effectively to checkmate loan defaults. If ultimately, when we get there, it will be such that if you take a loan from Bank A and you run away, abandon that loan and go to Bank B, we just hotlist your BVN in the portal and we fish you out wherever you are. So if you are owing Bank A $1 million and you go to Bank B and keep $2 million, the system will electronically hunt for you and recover that money to settle Bank A. And we can go further, blacklist you from owning a bank account in the country. So we think that is a very interesting and impressive development that will come, that will improve the leverage and borrowing culture in the country, and in a way add to economic development by way of improving demand and consumption perspectives.
The other point will be that non-banks can now participate in OMO auctions, and that will impact on your exposure to the Treasury bills window.
Well, dynamics change. The most important thing you have, why do businesses fail? Inability to adapt to changes in market condition. It's a market condition which have to adapt to. That is what it is. So which are the other areas? Even when CBN directive is trying to restrain you from activities in the treasury market, but they are not restraining you in the loan market. So you have the opportunity. Well, it behoves on us to look at each individual institution and hone your strategy, choose your market segment, create some niches, find a way to deploy your loan. So that's the area. So it's not a lockdown situation. That aspect may not be there, but there are other areas where we can use our liquidity.